Happy Monday, everybody. Another big week in the books. And recall last week I told you that this past week was going to be light on eco data, but probably not on action. And the week did not disappoint, especially if you're a bull. Today is August 11th, 2025, and this is your Monday market update. Now let's recap last week and what a week it was, and we'll preview this week. On Monday, stocks began the week in rally mode after early comments from Fed officials suggested a growing openness to rate cuts before the year end. That gave traders reason to lean risk on. The White House added fuel to that move by announcing targeted tariff exemptions for certain semiconductor components, easing concerns about near-term supply chain pressures for tech manufacturers. Coming off Friday, August 1st, the S&P 500's first daily move of at least 1% in 26 sessions, investors were primed for volatility. Techs led from the open, with the Nasdaq surging more than 2% intraday before gains moderated into the close as attention shifted towards Tuesday's ISM services report and this week's inflation data. The Dow was up 1.25%, S&P up 1.5%, and the Nasdaq was up 2%. Markets did turn cautious on Tuesday after the ISM Services Index slipped to 50.1, just a hair above contraction territory, undershooting expectations. Beneath the headlines, prices paid jumped to the highest level since October 2022, while employment fell further into contraction. That combination, slower growth with sticky inflation, rekindled stagflation chatter and pressured growth stocks. Housing data also drew some focus, with 2/3 of outstanding U.S. mortgages still locked in below 4%, shielding many homeowners from the current rates, but contributing to low turnover and tight supply. Stocks chopped sideways through the midday, attempted a brief rebound, and then faded into the close as defensives outperformed. The Dow was flat on the day, S&P 500 down 0.5%, the Nasdaq was down 0.75%. Midweek trading saw a modest rebound as bargain hunters stepped in to large cap tech and cyclicals after Tuesday's pullback. With no major U.S. economic data on the calendar, upbeat European factory orders helped sentiment globally, and several mid-cap earnings beats in industrials and consumer discretions gave the bulls some more to work with. Treasury yields stabilized after a two-day decline, giving a lift to financials. The market's tone stayed steady into the afternoon, with broad participation in the advance and tech reasserting its leadership. The Dow was up 0.25%, S&P up 0.75%, the Nasdaq up 1.25%. Thursday's open got a powerful boost from two headlines: a government announcement of tariff exemption for select chip-related products, and Apple's pledge of a multi-billion-dollar U.S. investment in manufacturing and data infrastructure. Those stories hit alongside a reminder of just how deep this tech investment cycle runs. Amazon, Google, Microsoft, and Meta, they spent a combined $88 billion on capital expenditures in Q2 alone. Now, much of that was directed towards AI and cloud expansion. Semiconductors and mega cap tech led early, pushing the Nasdaq to fresh record highs. The enthusiasm cooled midday after a lukewarm 10-year Treasury auction nudged yields higher, and Fed officials reiterated a data-dependent stance. The Dow was down 0.5%, S&P was flat on the day, and the Nasdaq was up 0.25%. That's a new record. Friday brought a steady, broad-based rally as investors positioned ahead of this week's CPI and PPI releases. With earnings season winding down, macro anticipation drove the action. Cyclicals, consumer discretionary, and financials joined tech in the green, and the market breadth improved. It improved noticeably after several sessions of narrower leadership. Treasury yields edged lower, offering valuation support, and the Nasdaq notched another record close to cap a strong week for equities. The Dow was up 0.5%, the S&P up 0.75%, the Nasdaq was up 1%. Markets finished broadly higher, fueled by dovish Fed expectations, selective tariff relief, and resilient tech leadership, even as services sector weakness revived some stagflation worries. For the week, the Dow was up 1.5%, the S&P was up 2.5%, and the Nasdaq was up 4%. Investors balanced signs of slowing growth with optimism that inflation may keep trending lower, leaving the door open for policy easing later this year. Let's preview the week ahead. There is macroeconomic data to watch. The headline numbers too. Tuesday, July CPI. We're going to need to watch used cars, airfare, and any early tariff pass-throughs. Thursday, we'll get July PPI. We'll also get jobless claims. Most people have believed that the headline number here is still okay, but we do need to watch. The estimates right now, 231 versus 226 prior. And in my opinion, 260 to 265 is when we're going to need to take more notice. And already continuing claims near 2 million remain a focus. Friday, July retail sales, and this is the big one because we need to watch for several distortions, but overall, we want to know how the consumer is shopping. We're hearing conflicting reports from the soft data and the hard data. With both CPI and PPI on deck, inflation's trajectory will dominate market focus, setting the tone for the Fed's September decision and the remainder of the summer. Fed heads, the parade is still slow in the summer. Monday, we'll get Barkin and Schmid. That's today. Wednesday, we'll get Barkin, again, Goolsby and Bostic. Now, just note, this topic has not gone away. We had a replacement for Kugler announced, but the list of candidates for Powell's job is still going strong. Once again, calendar is not over heavy this week with quantity, but the big three, CPI, PPI, and retail, will help to set the tone, and everything not on the calendar is probably the most important things to watch anyway. As always, stay nimble, but remember that this is short-term noise. Keep your eyes on the goals. The past few weeks have brought a number of major client milestones, and it is so exciting to celebrate. That's new homes, graduations, weddings. This is why we do this. So please keep focused, and let's talk about how to keep the plan lined up with your goals, no matter how this market is shaking up. Wishes for a great and productive week. We'll see you soon.